Action Construction Equipment, or ACE, is the stock which is on our radar. The company's reported a fairly upbeat Q2, a 37% increase in the company's revenues. We're joined by Saurabh Agarwal, the ED of the company. He joins us on the phone line. Saurabh, afternoon, and thanks so much for joining in. While the revenue growth is strong at 37%, your margins have come down from 7.8% to 7.2% at the EBITDA level. Given elevated raw material prices, is there a threat to the company's margins, and what could be the margins for the company on a full-year basis?
Yeah, good afternoon. Yes, we've had a good quarter in terms of revenue, but margins have been under pressure, primarily because of steel prices, and we did increase our prices in the last quarter, but the steel still kept on, becoming more expensive and still continues to do so. So just in line, we are again pushing a price increase, and going forward in this quarter again, we'll be pushing about 2-3% price increase. And putting it on a whole year basis, I think doing between a 9 to 10% on a EBITDA basis should be possible easily. See, apart from commodity prices, especially steel, we also had a provision for about 4 crores, which is a one-off provision, which hopefully should be reversed in the next quarter. And this was primarily on account of one of our mergers which we are doing, our subsidiary in Cyprus, Frested. So the asset value there is lower than the book value of the loan. So this has been provided in this quarter, yes.
Okay. All right. So we take that point then. So adjusted for that, then your margins will be pretty much flattish on a sequential basis. Saurabh, if you could give us a few more details. I think the last time you joined us, you told us that you're giving a revenue guidance of around 30 to 35% growth for this fiscal year. You're confident of doing that? And also give us some color in your various segments. What is the current capacity utilization levels?
Yeah, doing a 30-35% growth on the top line looks evident, and I think we are in line with that. And with respect to utilization levels, in cranes, we are working at about 75-80% utilization. For construction equipment, it's about 30-35% utilization. For our metal handling and agri segment, we are working at about 50% utilizations. Here, I would like to add that we are also working on increasing our capacity for cranes, which hopefully should be in place by December or, latest by January, yes.
Okay, so how much would your capacity in cranes go up by, and do you have sufficient demand?
Yes, we would be increasing our capacity by around 50%.
Okay.
And as it is, we are seeing an order inflow increase about 40% on a year-on-year basis. So going by that, the last quarter is generally, much more robust. So hopefully our capacity will be in place by then.
Okay, your order inflow has increased by 40%, you're saying, and cranes, the capacity will go up by 50%. After it goes up by 50%, what does your capacity stand at for your crane segment? And also, will you require some money to carry out this capex? How is your balance sheet looking?
See, our capacity in numbers would go to about 11,000 to 12,000 cranes per annum. And we won't require any money. We have enough cash available to do this capex. So obviously, we are doing it from our own funds.
Okay. Saurabh, what is the outlook on the material handling business? I know it's a small portion of your overall revenues, just about 5 to 6 odd percent. But you spoke about a capacity utilization of only 35% over there. The revenues for material handling have come down this quarter on a year-on-year basis. What is the outlook, and what is the company's plans with respect to that segment?
See, the outlook is very bullish and just in line. I think, again, a 30-35% increase in revenue would definitely be happening here as well. The slight decrease, about a 4% decrease in our revenue in this segment is owing to a fact that in the last year, in the same quarter, we got a big order from defense, which was executed in the September quarter in FY18. So that was the reason that there was a jump in that quarter. But luckily for us, in September, again, we've got more orders from defense, but they'll be executed in Q3 of this year. So you'll see a much better Q3 with respect to metal handling in this year.
Saurabh, I'll ask you about your balance sheet. What's it looking like? What was the debt at the start of this fiscal year? What is it currently? And by the end of the year, what will you wind down to?
Yeah, at the beginning of the year, our debt was around 78 crores, which currently stands at about 108 crores. So as per our planning, we feel that it should be somewhere around 40-50 crores by the end of this year.
40-50 crores, okay. So that's by March 2019?
Yes.
And at the halfway mark, Saurabh, you have done around 30 crores approximately in terms of net profit. You're telling us the second half of the year normally sees a bit of a rebound and the final quarter looks very, very good. Estimates on the street are talking about 70-75 crores in terms of a net profit. Doable?
I think easily doable, yes.
Okay. Thank you, Saurabh. We'll leave it at that. That's the word coming in from ACE, very bullish about the outlook for the cranes business, which does contribute close to about 75-80% of their overall revenues and margins. Get into a break. On the other side, we'll talk about the market technicals. Ashwini Gujral and Prakash Kaba join in with their trading strategies. Stay tuned.